You want to get funded and make payouts, but you can't because you're still struggling to trade profitably, and every time you go for funding, you fail it. Well, you'll be happy to hear that it's not your fault. And the reason it's not your fault is because you've never been taught how to manage risk like a profitable trader. You don't have a risk management strategy, which is why you're finding it so difficult to become profitable and get funded. So in this video, I'm going to show you a risk management strategy that you can implement today. I'm going to show you how much you should be risking per trade based on finding your own risk tolerance, where you should place your stop losses, and how to accurately calculate your lot size per trade, which is going to help you to build consistency and allow you to finally start scaling your trading income with prop firms. How to manage risk like a profitable trader. That's what I'm going to be walking you through in this video. So the reason you aren't profitable. Speaking from experience, one of the reasons as to why you're struggling to become profitable and keep failing to get funded is because you have poor risk management skills. So the question is, how can you develop your risk management skills? If you want to become profitable, you've got to have good risk management. Profitable trading is all about managing risk. That's really what it comes down to. And so good risk management consists of predefining your risk, so knowing your risk tolerance, accurately calculating your lot size for every trade you take, and knowing where to place your stop losses. Those are the three main things and skills you need to build to manage risk properly. Predefining your risk. The first step to developing good risk management skills is to know exactly how much you're willing to lose on every single trading opportunity. But how much should you risk on your trades? How do you identify and know what your risk tolerance is? By the way, if you would like to work with me and get my help to become profitable and start scaling your trading income, do consider checking out the link in the description. Finding your risk tolerance. How much you risk per trade will depend on your own risk tolerance, which will vary from trader to trader. So everyone has different tolerance to risk, and your job as a trader is to find yours. So on your screen, here is a risk meter that I've drawn up for you. And what this is going to do is help you to identify your own risk tolerance. And so I'm going to walk you through an example, and you're going to reflect on this and use this risk meter to identify your own risk tolerance. So on the far left-hand side of the screen here, we have 0.1% risk per trade. And so in this example, for this particular trader, this is too little risk, that you become disengaged with the markets and overtrade due to the lack of risk exposure. There's not enough risk on the trade to keep that trader engaged with the markets. And so that's not going to be a good amount of risk to trade with. Looking at 0.25% risk per trade, so moving to the right of this meter here, again, this is too little risk and you're not focused or engaged, which causes you to carelessly take low quality trades. As we move to the right of this risk meter, or the far end, we have 2% risk per trade. And this is way too much risk. You've become very emotional and hesitate to enter trades. All you can think about is the money. So you can begin to see here how you identify your risk tolerance. You don't want the risk to be too little for yourself personally, because if you have too little risk, it's going to cause you to become disengaged with the markets and lose focus. But if you have too much risk, this is when you're going to become emotional and you're going to hesitate with your trades. And so here we have 0.75% risk. And again, this is just an example to help you understand and find your own risk tolerance. This is not too little risk where you lose focus, but not too much risk where you become very emotional and hesitate to enter your trades. This is what you're looking for. You're looking for that balance, that medium where it's not too little risk, like I said, where you become disengaged with the markets, but it's not too much risk where you're becoming emotional and you are hesitating on taking trades and all you're thinking about is the money. So use this risk meter. Maybe pause the video for a second and use this risk meter to gauge and understand how much risk you should be putting on each individual trade that you are taking. This is how you're going to find your risk tolerance. Once you've identified your risk tolerance, the percentage of your account you will risk per trade, you must then consistently execute trades with this amount of risk. This leads to another question. How do you accurately calculate your risk per trade? Calculating your risk. So the second part of developing your risk management skills is to use a risk calculator to correctly calculate your risk on every trade you will take. So you may be thinking by now, what calculator should you use? So the risk calculator that I personally use and I recommend is MyFXbook's position size risk calculator. This is the calculator I'll be showing you how to use shortly. So if you go on Google or any search engine that you use and type in MyFXbook position size on Google, and you'll see the first option that comes up is the position size calculator. There's an image on your screen that you can see. That is the calculator that I personally recommend and use myself. So how do you calculate your risk? Well, there's 5 things you'll need to calculate the correct lot size, your risk, per trade. You will first need the pair you're trading. Secondly, your account currency. You'll then need your trading account size, your predefined risk tolerance, which we have gone through, and hopefully you have paused and identified that. If not, do it at the end of the video. And then lastly there, your stop loss size in pips. So the first thing is the pair you're trading. To use this calculator, the first input you'll need to put in will be the pair that you're calculating the risk for. Very simple, very straightforward. You then need to input your account's currency. So the second input for the calculator is to select your account's currency. And you can see on the screen here, I'm walking you through each step with a visual demonstration. Your trading account size. So the third input into the calculator is to put your trading account's size, your predefined risk tolerance. Again, which we have gone through, showing you that risk meter, finding that perfect balance between not too little risk and not too much risk. That risk percentage, your risk tolerance in percentages, this is then going to be the fourth input into the calculator. And lastly here, your stop loss size in pips. The last input into the calculator is to type in your trade's stop loss size in pips. But this may bring up another question. How do you find and identify your stop loss size in pips? To identify your trade's stop loss size in pips, I recommend that you use the long and short position tool in TradingView. These tools will also be used to identify where you will exit your trades. So as you can see on the screen here, here's a visual demonstration, an example of what these long and short position tools will look like. On the left-hand side, you can see this is a long position. We have the stop loss at the bottom, that red zone on the bottom there. And the area I have circled, which says 14.2, that is the pip size that you're looking for, which you'll input into the risk calculator. And then on the right-hand side there, that is a short position. The top side, the red box at the top, that is the stop loss. And again, I've circled 14.2 because that area, that number that I've circled is where you will identify your stop loss size in pips. Stop loss placement. The last part to developing your risk management skills is to know exactly where you will place your stop losses before you have even entered into a live trade. I have worked with too many traders. I've spoken to so many traders who do not predefine their risk or even know where their stop losses are before they place a trade. If you want to build consistency, if you want to become profitable, you need to make sure that before you even take a trade, you know exactly where you'll be exiting. And this is what I'm going to be walking you through in this last part in developing your risk management skills. The question is, where is the best place to put your stop losses? Where you place your stop loss will depend on your own strategy, of course, and trading style. But there is one law that every trader can follow to identify where to place their stop losses. The universal law for stop loss placement. No matter how you trade, so it doesn't matter your style of trading, whether you're a swing trader, day trader, scalper, your stop loss will be positioned in an area where you have identified that if price reaches that area, so it's a predefined area in price, that if price gets there, you deem that once price has got to that area, that the trade is no longer valid and you must get out of the trade, as the trade idea is no longer high probability. So that's how you know where to place your stop losses. And again, it doesn't matter how you trade, what style of trading you implement. Where you place your stop losses will be an area in the market where if price gets to that area, you deem that the trade is no longer high probability and you want to get out of the trade. That's how you identify where to place your stop losses. So those 3 things that I've walked you through in this video are what's going to help you to manage risk like a professional trader and develop your risk management skills, which again, is going to help you to build consistency and get funded. But there's no point having good risk management if you don't know how to think like a trader. So click the video on the screen to watch one of my videos where I'll show you how to think like a profitable trader. Hope this video has helped, and I'll see you in the next one.